Good morning, everyone. It is Friday, November 11th. Happy Veterans Day to all of you veterans and families out there. It's not just the veterans, it is about the families of those veterans as well that, sacrifice a lot. So I want to say thank you to all of you who have served. Let's take a look at what the heck happened yesterday. Okay, so we did get the CPI numbers out, and they were 7.7% inflation, which is still ridiculously high. Typically, we like to look for 2 to 3% inflation year over year. That's a little bit more normal. And the target Fed rate is usually right at 2%, but 3% is certainly doable. 7.7 backing off of those higher 8+ reads is an improvement, but it's still not great. And I don't want to just throw cold water on what was an incredible rally yesterday. I mean, look at this candle. In fact, if we just look at the SPY side, we had a gap and go. We never really looked back. The first 5-minute candle pulled back a little bit, which is what gave us the tail, and then we just continued on like it was cool. But in that, in July, we actually had a slightly cooler reading, and we did this too. We rallied, not as much as we did yesterday, but we rallied, and we continued more or less rallying until we got the following number, which then happened to come in hotter than expected, and we went down to August lows. So there's both sides. We have to be very cognizant that that this is just one number. It's not a trend. And that's what we're looking for. We're looking for a trend of cooling, and that's what the Fed will be looking for as well. We do get that next number the day before the Fed meeting next month. And my personal take is if we continue to show a cooling off, that the Fed may, instead of raising by 75 basis points, that they will stick to a 50 basis point rate hike. I don't think there's a pause in the future yet. Before they pause, they have said over and over. We had four or five different speakers out yesterday. They've said over and over that they will continue to raise, and they would rather over tighten a little than not tighten enough. So I'm not sure I'm on board with that, but that's what they're saying. So I think we need to take them at their word and know that they are going to continue to tighten. But it's the rate at which they tighten that maybe they could slow down a little bit, and they are open to that. We heard that yesterday as well. So what does all this mean for today? It means be on your toes. We are off the lows and the highs. This is just like a nice little doji futures candle that we have setting in right now. 370, 390, that was the range that we had been in for quite a while. We broke through 390, so now we're going to look at 390 as our support. And, well, what comes next here is probably the 400 in the SPY, right? That would be probably our next big target up here. We have a gap up here, but now be mindful we have a gap below as well. So today, what would I look for? We did this on good volume yesterday, so I kind of feel like maybe we'll just get some chop and sideways action. But if we start to sell off in that first 15 to 30 minutes, I would say that we are looking for a more, there's going to be some profit taking regardless, but I think that we would be looking to go lower into the weekend. Now, that being said, remember last time everybody got all excited, and we did continue to rally into that next data point. So I don't know what's going to happen right now. We're still it's still pre-market. It's pretty early, and the candle's not giving us a great indication. However, we have some pretty good tailwinds pushing us. So I think that there's a good possibility that we could continue on here today and use that 400 level in the SPY. But we don't know yet. Our futures have already hit it, so we'll see if that is where we stand out. Few charts that I do want to talk about real quick. Apple this morning, it hit the 50 and pulled back, but sitting above yesterday's high still, but kind of pinned right here in this little area right below the 50. So I think a move above that, we could get some really nice movement. I still like energy. my Oxy trade, because I held it through earnings, which is dumb. That was just, to be honest, a lack of paying attention since I was out the day that they reported. But I still like the overall thesis in energy, especially as we are not seeing any kind of uh, relief in energy yet. We're coming into the cooler season. We've heard a lot about diesel supplies being lower, so there's a lot in the energy sector. You open up your bill, well, I don't know, open it up on email, and we can all see that our energy prices continue to rise almost every single month. Ours has gone up in particular, so that we're seeing that play out here in the energy markets as well. So I do like energy. You could look at an XLE, CVX. These had really nice pullbacks. These still look like not quite made a nice bull flag. But if you put this on a weekly chart, it would be a bull flag. So look at these quality names. They look very very promising here this morning. We've also seen that financials are continuing to move here and show a great deal of strength. Now, yesterday you could have thrown a dart and hit something that was moving well. Today it may not be quite as easy. So look at the obvious sectors. Look at your sectors, see what's moving, see which sector is moving, and then go inside that sector and pick out a good quality name. I don't look to add any swings over the weekend, but I will be looking to day trade some momentum stocks. All right, everyone, that is it for me here this morning. Again, happy Veterans Day to all of you veterans, and I look forward to seeing you in the chat room. Have an awesome day.